Hey, this is Mike with PriceActionTradingSystem.com. This is Thursday, November the 29th. This will be our chart lesson for the day. And really what we had today was a trading range that was from just under 1411 to I'd say the range probably just above 1417. So about a 7 point range. We actually had a failed break higher. And then later we had a failed break lower here, and then we ended up trading back into the range before the day was over. There was somewhat of a little, I believe this is just a two-legged move. It was a little over-exaggerated. This was a news event right here, but I do believe this was just a two-legged move that got exaggerated and speeded up because of the, actually I don't even know if you'd say that speeded up because you see that one fell pretty quickly and this one fell similar. We just kind of got overdone. So I believe it's a two-legged move there. However, you were able to get some targets and so forth by, looking at this channel. So there's a little bit of a down sloping channel, but in the end, it just turned out to be a two-legged move, and then we headed back up again. So also, before we get started on the trades, somebody sent me an email today and says, hey, wasn't today just like yesterday? And you can see, I always like to flatten this out. And if you flatten it out, you can see the range really well across there. We did have a little bit of an upsloping trend line right here to start off as well. It came right off these first two bars. But I believe that the channel took more precedence, but we still had our rules. We had the break of the trend line, couple of legs up, and then we kind of sold off after that. So if you saw that, that helped as well. But let me show you again. Somebody sent me an email today and says, "Hey, wasn't today just like yesterday? Except instead of continuing higher, we failed and traded downward." But I don't think that's the case. There, you can clearly see the channel there today, um, or the trading range today, and you can clearly see that little downsloping channel, but really it's obvious today's a trading range. But now look at yesterday. This is yesterday's we traded down, had a reversal, and then we traded up all day long. So those 2 days don't look anything the same to me. And you might have had a little bit of a range in here, but still the trend is up all the way. And so I wouldn't categorize today like yesterday. That might be hard to see for you now, but over time, as you gain experience, you'll quickly tell. And it was real obvious. You actually probably would have started with your lines right across there. And you can see that actually still held a lot of the prices all day. So that's where you would have started at. And, it's obvious you had a failed breakout the high side, a failed breakout the low side. And then we tested the high again. We traded back down. But by the time this started down, you would have had this down here. And, you might have even eventually had to move it down here, but it turned out that this kind of held it right there. And then, so I believe that's the range for today. But again, starting out, you would have been right along here, like so. Actually, I think it's right along there. Coming off of these highs right here is what you would have been doing. Probably would have used the closes, and you can see that, and that kind of held prices. Even we got back inside it right here and tried to go lower and couldn't do it. So always put your lines on there because it does make it easier to see it. But let's go back. You probably, like I said, you would have had this here by the time the market opened. The market opened right in here. Went lower, failed, and turned up. But let me back out so we can see the trades a little bit better. I know it's harder for you to see. This is what you would have been looking at the open. Let's find out the opening bar. I forget which one it was. I believe it was actually this one right here. The market opened basically when this bar started, so right here. But when that bar right there closed on its high, that was a good place to go long, right above it. If you drew your trend line off these first couple of swings, and you should have had this coming up through there, and you can see that. And I actually, kind of verified it by drawing it off these couple of swings and then dragging it down, and it was close enough, it fit. So um, that was another clue to be looking right in here in this area for a bounce. But even if you didn't have that, you've got this, you've got all this support right across here. There's a double bottom, triple bottom almost. We broke lower. We tried to go lower again and then reversed. There's not a good setup right here. You might have taken this doji, but it was better to wait on a bullish bar. You got one right there. You got a second chance to even enter right here. There's still room to get out before you get back up here to the high. So you could have entered. Here was the better entry above this bar, but you could have entered above these two as well. And then you had another pullback. This is not really a break of the trend line here. There's not really any closes below it. So I believe this was the first real break of the trend line and a chance to go higher. It's really kind of a second entry long on the bigger picture. You got this one leg up, pull back. So that's a second entry long. And you got to figure we're going to probably test these highs. There's enough room to scalp out. We actually went a little bit higher. I wouldn't be comfortable shorting it right here yet. It was better to wait on a second, either a second entry short, which you never got, or a better setup like this up here. I tried to get short with a limit order here, couldn't get filled, so I dropped my order down here. And this is just a failed breakout, but now you got a for sure break of the trend line, two legs up, one leg up, pull back, second leg up. It's a failed break, again, above these highs. Notice that you only won a few ticks. Notice all those stems. You just about have to take this one, and it turned out to be a really good trade all the way down. And then now you're looking for a possible failed break lower here. That's a nice reversal bar. It didn't close on the last tick, but that's still a big reversal. Long way back to the EMA. You had this, failed break lower. Now your lows are probably right here. And so nice chance to fade this. And a lot of times people ask me what I mean by fade, and that's just entering against the move. You're coming down, so by fading it, you're going long when prices are breaking out a short, or up here if you're fading this, you got a breakout that goes long, you're going short. So in other words, you're just taking an entry in the opposite direction. That's what I mean by fading a trade or fading a move or whatever. So if you're fading a move, you're taking the opposite direction from the way the move is going. And so nice entry right here. Actually, up here your runners were safe. Down here your runners were safe. You probably would have exited them right here, but you could have at least ridden this up till you got in this chop and gotten out on the break. And then now you got two legs back, but the big thing is you got all this overlap and a failed break and a chance to go low right there. It's a pretty bearish bar and another quick scalp. That's all it was good for. I didn't like the setup going long, even though you got this support across here and you got all those matching lows. I didn't like going long here because it's, there's a chance it's going to snap back, and it did. But we never got a tick lower here or a tick lower there, so I didn't like going long there either. But you can kind of see what it turned out to be. This is one leg, pull back, and this is a second leg. And if you measure it, they're probably going to be real close. There's leg one. And there's leg two. This one didn't quite get there, but we couldn't get back above the resistance area. So they're real close. And there's actually two legs in this leg. One move up, pull back. Actually, there's a little two-legged correction there. Boom, boom, boom. And then the second leg up. But that's a nice reversal bar. You can't ignore those. And it's coming out of this overlap. So there's multiple reasons to go short right there. Easy scalp, nothing more than that. So now we're headed up again, and then you get these highs up here. You wouldn't have had this trend line here yet, so all you would have been looking would be the range, and you got this reversal right here. This was worth, and notice this is where the highs were previous, and you got this little doji right here. It was okay to enter right there because look how tiny it is. You can get in real easy. You can get in with a very small stop, And so I like that trade right there. If you didn't get in there, you could have gotten in even down here. It's a little more risky down here, but you got to be thinking we're coming off these highs. Now we're probably coming back down to the lows. Um, so a couple of different ways you could enter that one. Then notice what we got, a two-legged pullback. And this was news generated. And somebody sent me an email and says, hey, how did you catch this? Because it happened so fast. And what I was doing, I was already expecting prices to come down. And I was actually still had a short from here because any runners were good from up here. But I had it on here. And how did I catch this? Let me show you how I caught this. Actually, before that, now you got two swings here. Put this line on here, and you copy that line and drag it down to this low over here, and look at that. And so that's where you should have been expecting a possible move to. You don't know that it's going there, no, but that's, the market moves in measured moves, and it moves in twos. And so that's what you're expecting. You're expecting, and you got a measured move from this one. Because look, there's two-leg correction in there, so now you're looking for your other leg, and look where it goes to. It went a little bit further, but that's because this was some really bearish news, and this was really news-driven. But let me tell you how I entered this trade. I saw the first entry with all the overlap, then it pulled back, and then I saw the second entry right here, and I really thought prices were going to break higher in this bar, especially when they're trading up here. So I just went ahead and dropped a sell order right here, one tick lower, thinking that, hey, we're going to tick higher. Well, we've already really ticked higher right here. So I'm expecting to get short right in here. And that's a failed second entry long if it turns down and breaks lower and turns into a second entry short after two legs back to the EMA. So you got to already be thinking, and if you weren't ahead, I was doubtful you had time, but I noticed even here that it gapped and went a tick or so lower, and it had to come back and fill that gap. So you could have even gotten in right here with a limit order on my chart. And I don't know how it worked out on your chart. You may not have had that opportunity, but on my chart, I had a chance to get in again right here if I'd have missed this one. But I got lucky thinking, because I was thinking ahead and got in this trade. Was I expecting it to go down like here? No. I really thought it was probably going to go to here, but when it went on through without bouncing, what I started doing was I copied this line up here just like so, drug it down, and I started placing my order one tick above the line and exited, so when it ticked through and hit the line, I would get out. So my order was like right in here. So I got out like 1408 and a quarter. It looks like it went to, I got out about a point before the low. It looks like I was thinking it was 3 ticks, but it looks like it's about 4 ticks. And guess what? I got out almost at the very low before it went higher. And there was actually a long here. I meant to circle this one green. I didn't take it because this was really bearish, and I wasn't convinced that we may not have a trend line coming down here and that we may not make another leg down too. So I didn't enter here, but if you saw this and you did enter here, I was pretty happy with all my profits by this time, so I didn't want to give any money back. But I'm going to go ahead and mark this one in green. I meant to do that, and I overlooked it because there is a trade here. If you saw it, it's kind of risky because this is not a good setup bar, and that's why it's another reason I didn't take it. I wanted to take it, but because it wasn't a good setup bar, I did not, because I wasn't sure if they wouldn't just keep running the stops a little bit further or even make another leg down. So, but when we came up here and pulled back and made a higher low right across, this is kind of a failed break lower here too. We'll just drag this line down, make it easy. And you can see that. And when we came back and kissed that line and turned up, we didn't turn up yet, but then we opened way up here and we got that stem, and then we went higher. This was a long right here. And, because you got this strong support, you got to figure that we're probably coming back to test the breakout area. Um, Notice that we hadn't tested this breakout area. We didn't test this breakout area. So you got to figure, and you can see that's where we got back to, and then they tried to sell it off again, but they took it higher. And you also had, that's probably also because of this trend line. So it's obvious there's a lot of confusion in here. You know, are we going to keep it in this channel, or are we going to drive it back to test the highs again? So you could see that people could see these things, and they were trading. And you know, I circled this in green, and I'll tell you about that in a minute. But there's a long right here, and then you got a you're trying to come down again, and there's another long right here, because now you got one leg up, and you're making a higher low, and you got this little trap. This was not a very good setup bar, so you didn't want to go long here, but when this one ended, this was a good place to go long, thinking that, hey, we are going back up to test the other side of the channel. We just came off the low side. I was surprised when we went higher here, because I really thought we were going to come back down and stay in this channel. But it just turned out to be a two-legged correction. You can see that there were a lot of people that were confused. Look at that. And it just turns into congestion. And really, where I entered here, I'm going to show you. I didn't like this setup, even though it was coming off the trend channel line. Notice it's, you know, there's three overlapping bars. This is a doji, and look what happened. It went lower, and then by the time this one hit, then you got four overlapping bars, and look what happened. It ticked lower, and then it closed, and it got hung, then it went up. And if this one would have turned and had a big bearish bar like this one, I would have definitely went short. But now you got, you know, it's just not very bearish looking. It's more overlap. And look what happened. It went lower, and then it went back up. And now you got a failed second entry long and a trap right at a trend line. So I went short right there. And it came down, it hit this, and it bounced, and it came right back, and it went up, it touched again. I actually kept my stop up here, but when it went down again and that ended as a doji, I got out of this trade. And I was glad, because it started heading higher, and it's looking real bullish again. And then it ticks one tick higher and turns down. It's real negative. And what happened? I went short again, thinking I'm finally going to catch it, because now we got them trapped long. And again, what happened? It just ended up making a double bottom. And so what I ended up doing here was just putting a limit order to exit here. I only got 1, 2, 3 ticks. And guess what happened? It ticked one tick higher and turned up and was off to the races again. So there was a long right here. I just circled this in green just so we could talk about all this, because this whole piece here is important. But what would have been smart of me, now looking back on it, it's just hard to ignore a big bearish bar like that where you got a suspected trend line coming down. But with all this overlap, you know, the smart move would have been just to stay out of this and then wait on this double bottom, catch this trap, and then go higher, because that's exactly what you ended up getting. And you can see that right there. You know, this turned out just to be a two-legged pullback, and each leg's got two legs in it to the EMA that created a double bottom, and off we went to the high side. So, and we did have a range, so it wasn't unexpected to think we're going up here. So hopefully that makes sense. But I always like to talk about that. I know those are, you know, these are good learning examples. But it's hard to ignore a big bearish bar like that and a big bearish bar like that. But if you get in a trade, you know, generally when you see these kind of bars and prices, you know, break lower, they take off. They don't hang around like that. So the fact that they were hanging around was not a good sign, just like right in here, just like right in here. But look at that bearish bar. Look, prices never looked back. Look up here at this bearish bar. Prices really never looked back. Even on this one, they took on off pretty fast, even though they stalled a little bit. And you notice what happened. It turned and went up. So when prices, when you see the right kind of setup, and look, here's a big bear, you know, this is kind of bearish right here. And look how it took on off. But when you see a bear, you know, a big bearish or a big bullish bar like that, and prices just like right here, look at this big bullish bar. When it broke higher and it didn't take off, that's not a good sign. Look at it. It comes back and it just goes just far enough to run all the stops of everybody that got long there, and then it reverses again. So the point being is, if you see one of those bars and prices don't do what you expect, a lot of times it's better just to exit and not fool around. Here's another one. Look at that big bearish bar on a failed breakout. Of course, this was an uptrend day, but look what happened. Prices couldn't even hardly break lower. When they finally did, they just chopped a little lower and then went higher again. So just remember, when you see those kind of bars, generally what's going to happen is when prices break below them, they're just going to rocket on off like that. And they didn't do that here. They hung around. So that's not a good sign. So hopefully that makes sense. But there's one other trade up here. Again, I didn't like this setup because you got too much overlap. This bar didn't end bearish enough. It's more of a doji, especially with these other two. If this had been sitting up here by itself, I probably would have still liked that one. And but look, you got this is really a two-legged move back that went higher. So this is kind of a second entry long that failed. And so this is a trap, but it's a double top. It made a lower high. Look at all the stems. This is strong resistance, has been all day. So you want to take that trade with this bearish bar right here. And you see it even took it a minute, but it rocketed on off. So that's the difference. Sometimes when you get this, you're better off just wait and see if you can get a second entry. And you really didn't get a good, even though you had a second entry right here, so to speak, that's definitely not a good setup, because now you got all this overlap. But that's another thing. You got all these overlapping bars with these matching highs, and it broke higher and failed. So that's a trap of types too. It's a breakout of congestion and then turns back down. And so the mere fact that you got a double top up here coming off the highs of this range, and by now it's obvious, if you back out of here, it's really, really obvious that you got a range day. I mean, that's obvious to see. A double top at a strong resistance. It just doesn't hardly get any better than that. And it moved down pretty swiftly too. So, and a lot of these your runners were safe on, especially the ones that come off the highs and lows. I got a few emails yesterday that there were some issues with the video, but I think it was a YouTube issue, because I noticed it too, and I went and tried to play a few other videos, and I couldn't get any of them to play. And then a little later, it finally played, and I got some emails back that most of the people that said they couldn't get yesterday's video to play said it was working now. So, I mean, I think it was some kind of YouTube issue or something. So, but anyway, videos are working. Hopefully today there won't be any problem. One, you can watch it on time. I'm going to have it uploaded. Well, you won't know. It'll be uploaded before you know what time I'm going to tell you it's going to be uploaded. So that's a waste of time, I guess. So, but anyway, I'm going to wrap it up. I hope you had a good trading day. It was just a typical type range day. There was a little confusion in here and in here. But that's when it's just best to stay out, but it's easy to get sucked in, just like I got sucked in twice here. And if I would have just paid attention and said, hey, I'm not smarter than market, even though we got this downtrend line and it seems to be holding prices, that doesn't mean anything, because you see we broke it and went higher. And so when you get in this overlap and just right here, you really thought prices would go lower here after that big move down possibly. As well, but you could just as easily be coming back up to the high side. So when you start to get this stuff, just stay out and wait until you see a trap. And you got a trap right here, and then you got a trap right here, and both of them are nice traps to the upside. There was a trap kind of right here, but you never really got a good bar to enter on. You don't want to enter on this one. It's still got too much green. Let me just back out since we're talking about that. There's too much green right here. You got to wait. And then the next one, look, it ends as a doji, then it ends as a doji. And it's just all indecision. And so, and again, going back, one other thing, this was the news item. And what happened was they came out and said that they couldn't resolve the fiscal cliff yet, that they can't come to an agreement, which everybody was hoping for. So that was not perceived as very good for the markets, and they promptly sold off. But let me show you this. I mention this a lot and people forget it, is that one thing, it's very rare when you'll get a big news item that rockets off in either direction and continues going very far. Almost always, even if prices are going to continue selling off today, before that happens, they're going to take that news stuff back. And see, and that was another thing I think that was confusing people, because they were thinking the market's still weak. We got this downtrend channel. But hey, we came back and took all the news back. So you'll see that. In other words, what I'm saying is this big, huge move down is not going to keep going probably 9 times out of 10. It's going to come back sometime fairly quickly and take all that back and then just kind of start over from there. So this is kind of a start over, and they tried to work it higher, and then they tried to work it lower, and then they tried to work it higher, and really we're just stuck again. So remember that. And one other thing too that would have given you a clue of where we were going, there was the gap from the overnight. We opened right here. Let me put a line across there. That's where we opened yesterday. So that is, and this is where we opened at 8:30. So when I'm saying a gap, you don't see it on my chart because I've got all the overnight movement. But if you just went to, if you just went to where we closed yesterday to where we opened at 8:30, there's a gap between here, 1413.25, and down here at 1406. So there's about a 6 or 7 point gap. And notice where prices came to. They came within one tick of filling that gap. Those gaps almost always get filled. So that was another clue where we might be going with that, was to fill that gap. And we missed it by a point, but I'm thinking that's because, and so that's, if there is a gap and I'm using that for a target, I always put so like I got short here and here, what I use for my target, I'm not going to give that gap my target, because a lot of times it'll bounce 1 tick or 2 ticks, because there's so many people anticipating it bouncing at that level. There's a lot of buy orders in there if it's coming down to it, and if it's coming up to it, it'll be a lot of sell orders, so to speak. So it's smart to not try to exit right at your target. Always try to exit a few ticks prior to your target, because you don't always make your target, and you don't want it to bounce off your target a dozen times and not get filled, because that's the worst thing. You end up giving back a point or two trying to make 1/2 a tick or a tick or something. So just get out a tick or two early. Don't be greedy, and you'll probably be better off. So, and you can see we've opened back up here, and we're selling off these highs again. We made a little bit lower double top here. But anyway, I'm going to wrap it up. This is Matt with PriceActionTradingSystem.com.